Picture this. You work hard 10 years, save $120,000. Finally, buy dream car. Porsche 911. Ultimate symbol success, engineering excellence, reliability. Brand existed 75 years. Built reputation, financial stability, never struggled. Drive off lot. Month later, CEO sends message employees, quote, "Our business model no longer works." End quote. Company profits fell 99% from $4 billion to $40 million. You just paid $120,000 for car from company saying business broken. That's Porsche crisis. Today we're breaking down how Porsche profits collapsed 99%, why CEO says model no longer works, and whether luxury brand built on stability can survive when everything changes at once. Now let's get into it. Porsche profits fall more than 99% as CEO in crisis mode. Quick note, this info comes from multiple sources. If something's wrong, drop a comment. We make economics so simple that anyone with zero knowledge can understand. Middle 25, Porsche CEO Oliver Bloom wrote message employees. Inside message crucial line, quote, "Our business model no longer works, its current form." End quote. Hearing that from Porsche unusual. Company built on control precision, long history, financial stability. Their cars carried confidence over years. Think 911 Carrera RS70s, futuristic 959, Porsche 918, Spider blended electric power race engineering. Cars defined ambition, decades formula seemed working. Simple. Porsche built luxurious fast cars. People bought them. Company became one most consistently profitable automakers world. That's why recent headlines feel unexpected. Most shocking, Porsche's operating profit, once comfortably sat billions, fell from 4.04 billion euros, roughly 40 million, first 9 months, 2025. Put simple terms, staggering 99% collapse. Like restaurants, making 4 million yearly profit, suddenly making 40,000, almost nothing. Same time, demand some most important markets slowed. Transition electric vehicles become far more expensive, complicated than expected. All pressures came together same time. Brand known stability bordering crisis. How did Porsche get this point? For most life Porsche company you could count on. Year after year, brand stayed solid, great cars financially steady, even when rest industry struggling. Sure, minor dips, always bounce back quickly. Part stability came, way Porsche built cars brand image, early models set tone. When very first Porsche, the 356 appeared, 1948 showed what company cared about. Light, clean, design engineering felt intentional. Approach created something rare. Porsche became recognizable, way most brands never manage. 911 made clear. Unmistakable, iconic, low front, round headlights. Curve flowed effortlessly back. Even people never driven one new shape. Sports cars made Porsche desirable. SUVs made familiar. Cayenne 2002. Later, Macan brought brand into everyday life, turned commercial success, while models shaped Porsche's presence. Road racing shaped identity. Over decades, company earned around 30,000 victories. Performance reputation felt earned, rather advertised. Experience owning Porsche helped too. Dealerships often ranked near top customer satisfaction. Many buyers returning again. United States brand regularly appears among highest owner loyalty. Price played own part, brand's image. New Porsche 911 starts around $110,000. Higher trims easily cross $200,000 mark. Older 911s often hold value, well above $100,000 depending condition, rarity. Behind scenes, Porsche kept tight control production. Vertical integration helped company maintain consistency, keep costs predictable, showed up numbers. Porsche earned estimated 18,000 euros profit per vehicle. Solid figure company, its size. Ferrari sat much higher, 136,000 euros profit per car. Broader luxury market. Porsche still stood out. These pieces shaped brand, felt both exclusive familiar. If Porsche built model this strong, how Earth operating profit collapsed 99% 2025? Profits weren't only things slipping. Global revenue deliveries also moving downward. Sales fell 6%, roughly equal 1.7 billion lost revenue. Around 13,000 fewer vehicles delivered across year. What's driving this? Mixed geopolitical pressure, expensive technology shift, global economy becoming harder navigate. One biggest challenges comes China. Country been one Porsche's strongest markets years. Early 2025, something flipped. Deliveries China dropped 42% compared previous year. Some came weaker luxury spending, lot came competition. Chinese brands like Zeekr, NIO, Xiaomi's SU7 began offering cars advanced software, strong performance, lower prices. May scoff Chinese phone brand, Xiaomi being competition Porsche. But Xiaomi SU7, impressive. Great software features, build quality, versatility, range, great drive, all stacked together. Basically no question if car like this available US $42,000 would crush. May never get car like this, US that price, Europe allegedly 2027, competition there, at least little bit trouble when happens. World changed. China can make great cars now. Chinese buyers starting choosing tech value over heritage, wanted intelligence, inside car much as power under hood. Suddenly, German badge no longer deciding factor, like choosing smartphone, used to be Apple or nothing. Now, Chinese brands offer same features, half price. Same time Porsche dealing own electric transition, wasn't going well. Company entered EV space confidently with Taycan, had early momentum. Interest slowed eventually. 2024 global Taycan deliveries fell 49%. Company once aimed 80%. EV sales by 2030. Target now softened. CEO Oliver Bloom called goal, quote, not realistic anymore. And quote, issue wasn't Taycan itself. First generation had little niggles. Just EV luxury market moved unpredictable ways. Interest went up, then down, then sideways. Meanwhile, input costs never relaxed. Part pressure came Porsche's own strategy. Company investing heavily new production capability, reworking factories, building out battery operations, can offer wide mix models. Recently, company filings show about 2.7 billion euros gone upgrades new facilities alone. Kind spending makes sense long term. Short term, sits balance sheet like massive weight. Then broader economic environment. Tariff pressure made things tougher. Porsche noted latest trade measures push costs hundreds millions. Hit landed, right company, already spending heavily new production. Altogether, Porsche expects invest 3.1 billion euros 2025. Even cautious planning company, only projecting small positive revenue margin, once proposed 15% US import tariff included. When look everything together, picture starts making sense. Eventually, all added up. World around company simply changed. Faster. Business model could keep up. Porsche now finds itself unusual place. Company needs healthy sales fund, engineering ambitions. More tries scale, more risks, losing exclusivity, people expect brand. Balance always been delicate. Shift electric cars made even tighter, pricing where tension shows first. West high performance electric cars, expensive build, batteries, cooling systems, software, motors, everything carries premium, balance delivering, quality, right price. If Porsche prices EVs too high, demand drops. Prices too low, margins disappear. Finding balance become harder. Time when adding more models helps solve problems. Porsche expanded SUVs, long stretch move paid off. SUV space crowded now, every luxury brand has one. Porsche isn't only one going through this. Every high-end automaker dealing same question. Ferrari, Bentley, Mercedes, AMG, BMW. All need huge research budgets, develop modern electric platforms, all trying guess where demand heading. What makes Porsche important here? Besides catastrophic 99% collapse profits, what situation represents? Company known discipline, built reputation, engineering, confidence, financial consistency. When Porsche says ground under business shifted, tells something landscape itself. Suggests heritage isn't enough anymore. Brand power isn't guaranteed. Next generation luxury performance shaped by technology investment levels difficult even strongest companies manage. As well, threat from east. What does mean Porsche's future? Opinions split. Some see brand drifting away conditions made successful. Others see company preparing reshape itself. New era. Cautious view says Porsche's challenges run deeper. Markets once gave companies strength cooled. Emotional appeal. Porsche built decades not automatically transfer electric performance. Under view. Roadback. Healthy business may be long. But alternative, optimistic way see moment. Porsche. Long history. Adapting when circumstances demand. Company made bold moves all before. Reinvention, something Porsche done repeatedly. Maybe another those points time? Already see hints where company aiming. Recent Focus hybrids suggests more measured approach to electrification. Limited run performance models continue showing strong demand. Shows scarcity can be stabilizing force. Tightening volume expectations. Porsche may preparing prioritize identity over scale. If strategy holds next phase, Porsche likely feel more curated. Fewer models chasing broad appeal. More emphasis, kinds cars remind people why brand that became iconic first place. Since moment becomes less decline, more recalibration. Raises bigger question. What does luxury performance brand look like? World where technology moves quickly, consumer priorities shift every year. Porsche. Try and answer now. Way answers may influence how rest segment evolves. Even Porsche's decades-long financial blueprint can break under intense pressure. What say future luxury manufacturing consumer desire itself? Ultimately, question remains. Can company built 75 years stability survive when everything changes at once? Here's question. You saved 10 years, bought Porsche, believing brand represents stability, engineering, excellence, reliability. CEO announces business model broken. Profits fell 99%. Chinese competitors, half price, better tech. Do you regret purchase? Or trust Porsche reinvents itself like always done? Don't forget to subscribe so you don't miss any videos.